The sponsor of Liftoff with Keith is the one and only CompassStrategicAdvisors.com, an experienced partner to help you navigate everything from cap tables to stock option and compensation plans and all types of backroom and marketing services. There is no better friend to the startup CEO than Compass. Check them out at CompassStrategicAdvisors.com. Clint Chao is the latest to join the Liftoff. He's the co-founder and general partner at Moment Ventures, a Palo Alto-based early-stage B2B tech VC firm he founded in 2015. Moment backs startups transforming the operation of large industry verticals, logistics, food, healthcare, creator economy, travel, under the thesis of what they call the future of industries. The fund is institutionally backed and is actively deployed at seed and pre-series A. They've got a pretty deep portfolio of a whole bunch of successful deals. Clint's a longtime Silicon Valley operator turned investor, an early exec at folks like C-Cube and Skystream before pivoting to VC. He's a proud Berkeley Cal alum, a clear, direct writer and thinker. His recent posts on enterprise AI adoption and sharp and timely thoughts. Also, if you leave him alone behind the three-point line and he gets his feet set, forget it. It's night time. Game over. But this game's just starting as we are going to welcome Clint to the liftoff. Clint, so tell me, how are your two favorite investments doing?
My favorite investments, my two kids. I have two daughters, 24 and 20 now.
Wow.
So my older one is out of college and is living in Utah, and my younger one is just finished her second year in college, and is it's interestingly enough, I was a double E coming out of school. My wife is finance, and both my kids are arts kids. So my younger one's pursuing a career in film and TV production, and my older one is pursuing a career in contemporary dance.
I
And
love that.
so awesome.
But
I'm
does
super.
that tell you that these kinds of traits that we acquire are not really hereditary, or do they just see what you were doing and decided to steer away from all of that?
Well, so first of all, I'm super proud of both of them. I think it's really cool what they're doing. They're probably pursuing two of the things that AI won't really, disrupt.
Right.
So I love that. And secondly, is I think just growing up, they probably just found stuff that Dad was working on not that interesting, and the real world out there far more interesting. So it's excited about what they're pursuing.
Good. And how's everything going with the fund and your portfolio?
Great. Yeah, it's an interesting time. I think everybody knows that in the last couple of years with AI coming into the foray, it's been super interesting with so many things going on. And it's really interesting. I don't know if you think this, but it's like the general public is kind of the audience for us in real time, right? I mean, anything that you hear about some company, we're referring to the CEOs of these companies by first name as if we know them. We're like we're getting a chance to witness a lot of the building sort of in real time, which is, I find that super interesting, not just as an investor, but also as a consumer of AI. You just jump on X and you'll see all sorts of interesting things from people.
Did you say though that the first wave is over? Did I read that correctly?
Well, it's
That
interesting. I think the first wave, and when we're talking about AI, is that I think
the hype.
everybody knows about AI. Everybody's kicking the tires of AI, and everybody's finding all sorts of great productivity gains from it. But I think if you dig deeper, we're still really early in the fact that I don't know if enterprises have fully jumped in yet and are ready to actually embrace AI. There's all sorts of issues that they still got to figure out, whether it's integrity of systems using their data, there's governance, there's the fact that their infrastructure might not even be ready for a lot of this. And then the way I like to say it for consumers is like, I think AI for most people has kind of been like single player mode, where I use AI and make myself more productive in writing or in analysis or in what have you. But it's not like we're really interacting together with multiple streams of data from, multiple groups inside a company and actually benefiting from the scale of that. And I think that's coming, but I think that's opening the door for startups to innovate in those areas. So we've been spending a lot of time on that, which is really cool.
So we're still sort of stuck between, as you called it, revolution and reality.
Revolutionary, I call it, we always get stuck between revolutionary value proposition and evolutionary revenue ability. That's not really a word, but I made it up. It's that in enterprises, you do have to sell something to them, right? And I think as a startup company, you have to remember that that's first and foremost to create a product and wrap it into something that customers can actually buy. And then you can build a sustainable long-term, value from that. The one thing about AI that's interesting right now is things are changing so fast that you design something today, you're probably competing against a company that's going to be coming out in a year that doesn't even exist yet.
It is really fast. The pace of evolution, the pace of change, we, could refer to LLM models and how fast they evolve compared to what happened with the old OSs we used to play around with. But I also just look at customer adoption. So let me ask you, what does winning look like in this whole world of AI? And I'm trying to win the game. I'm trying to score. I'm trying to close a deal. Has that changed a lot in terms of the companies you're working with and what you're seeing out there?
Well, I think, there are obviously some very fine exceptions to this because, the frontier models that have blasted out of the gate and we refer to their people by first name, essentially, they basically suck the air out of the room in these early chapters, right? Because we're all engrossed with using their platforms, whether it's Anthropic or OpenAI or X or what have you. And every one of them, they're game changers for all of us. But as far as being successful within enterprises, I think at the end of the day, I think I'd like to say that the new mode is really account control. It's not really a technical thing anymore. It's that you have to be able to create a solution that actually, captivates the customer in a way that they want to stick with you over the long term, right? Because right now, enterprises all over the planet, I think generally we're still in tire kicking mode. I think a lot of people are doing experimentation. I think they're doing POCs. They're testing things out. A lot of companies have people who have been anointed the AI person, make AI work inside the company. And so they're trying out as many things as they possibly can. But if you're a startup and you're responsible for, at the end of the day, driving revenue and creating revenue for your company, um, you spend a whole bunch of resources to get in with an enterprise and you do a POC and what have you. But if they can easily just turn you off, that's really hard to build a sustainable value proposition, right? On the other hand, if you're a startup that, for example, does a bunch of work with companies where you're ingesting a lot of their data and you're helping them train and create models of their own that they can use for their own productivity needs, or perhaps you're mining data in a specific domain like healthcare or another industry where it's really hard to collect data and use it. Once a company goes through that effort, I think there's a tendency to not want to have to go through that multiple times with multiple vendors. So again, I'm sort of an old school sales and marketing guy. I always think the best technology doesn't necessarily guarantee that you win, but if you have the most customers at the end of the day, you're guaranteed to win.
What's the lock-in feature? You have to find that lock-in and not let them go. I mean, I have to balance that out with what you and I have talked before about the SaaS apocalypse and what's going to happen with the Salesforces and ServiceNows and Adobes of the world. Are they under like existential threat time, or do they have enough locked-in value, that data you referred to, that they're safe and that let AI go work on some other things? How do I balance that?
Well, let's just look at us as consumers today. I mean, I think maybe 2 years ago, 3 years ago, we might all have our favorite, frontier model, our favorite LLM to use. We were either an open AI user or a Claude user or what have you. And maybe you even subscribe to one specifically because that became your go-to platform.
Yeah.
But I think today, because the capabilities are changing so dramatically, we're sort of playing all the different platforms interchangeably. I think people use, AI platforms for very specific uses, and you might switch from one to the other. So I think that's going to be the same case for enterprise sales, right? I mean, I think you really have to figure out a way to get customers to really embrace what you have. They got to dive in with you. I always like to think as a lasting vendor to an enterprise, you have to find a way to get on the inside looking out. So you have to find a way to become part of their company in a way where you become a trusted supplier for some discipline. In AI, a lot of it is in mining their data, organizing their data in a way that can then be trained and used in AI. It could be um, maybe building out or modernizing their infrastructure so that even the dated infrastructure that they have can benefit from the efficiencies brought forth by AI, all sorts of things. But those typically require a good bit of work, not just from the customer, but from you as a supplier. So working hand in hand with them, I think helps create, I don't want to call it lock-in. You always have to continue to earn your keep, but at least buys you that relationship where you're on the inside looking out, if that makes sense.
Yeah, you have a unique perspective in the seat you sit in, the size of the fund you work on, plus your background in, in this business for so long. How do you look at the contrast between those companies that you decide to invest in and those you take meetings from and are evaluating? How, what are you looking at when you're taking these meetings? You've qualified them to some degree. So, what's that idea that gets you excited? And then when they come in and really share the details of their story, their technology, their moat, their go-to-market, their team, what is it that you're seeing out there that might be different from what we first looked at 10 or 15 years ago?
Well, it's interesting, Keith. Some things never change, and some things are sort of brand new in this new environment. But some of the things that never change is that experience in a domain really matters. A lot of the kind of companies we look at are building next generation infrastructure for other established industries. So they'll build technology infrastructure for the logistics space or the food industry or the healthcare industry. And a lot of times the value propositions may sound really awesome, right? It's like it's so easy to go ahead and say we're going to transform healthcare for this, but as you know, nothing happens that easily, and I think entrepreneurs that know what we all don't know about what needs to get done in an industry, I think gives them an advantage, um, in succeeding in that space. The one thing we have learned as companies have gone off to create logistics solutions or food solutions or healthcare solutions is that the industry that you're targeting sometimes they're like 100 years old, right? They're used to doing things a certain way, and it takes relationship building. It takes a narrative that makes sense. It takes getting to the right influencer in the right kind of company to help to move the market. But once you can, then you can sort of break the logjam and create something of lasting value. Best exemplified, for example, if you think about someone like Uber, right? Uber's what they got going in 2009, so maybe a little over 15 years ago they came forth, and they could have actually just used their technology to license to the existing transportation companies like cab companies, for example, and use their software to track cabs on iPhones. It would have been a totally valuable resource. But if they did that, they'd probably be a lot smaller than they are today. And, as you know, they created an alternate universe infrastructure, and what it did was it changed everything about how we as consumers view transportation and also how people who make a living in transportation view their profession. Now they can do so many things that you couldn't have done 15 years ago. And so hundreds of billions of market cap later that they created, there's like no going back, right? So they created something of lasting permanence, but they had to climb that, they had to scale that wall, and that was definitely not easy. So I think today when we run into companies, we try to look for that. Like if, okay, this is a groundbreaking idea and might require some behavior change in your target customer, but if you're right, is there a chance you can potentially run the table on the behavior in the future and capture all of that value as a result? So I think it's tricky. I think it takes a lot of conviction, a lot of experience, good timing. It takes a good team that can actually figure out. Sometimes it takes a little bit longer than they originally planned, and we get to see it firsthand as investors.
Yeah. One of the things I think I'm picking up on too is the value in working with partnerships as you go out and go to market, as opposed to, that enterprise sales force that took on the world. Now you're like, okay, I'm going to go ride the coattails of AWS or NVIDIA, maybe. It depends on the industry, of course,
Yeah.
right? Flake and Databricks, folks like that. In the enterprise space, do you see that as more an ecosystem driven go to market plan where you've got to have some of those relationships in place, or it's going to be even a steeper climb?
I think it's yes. I mean, I think um, there are definitely entities out there where you have aligned interests where actually you can succeed together. And in fact, in most successful companies, successful startups, that is, they've actually benefited from a relationship with some big established player that also benefited from whatever initiative you were pushing. And
Yeah.
so I think for founders that are starting off in a particular industry, it's really incumbent on them to figure out those relationships early. The ones that are tricky, and this is probably a deeper subject of conversation, but is like I sometimes startups try to establish like a reseller or partner reseller relationship with a company that's already established in the space. And in those examples, I actually issue caution quite a bit. I think it's a lot harder than it sounds to actually be successful in an industry. And if you sign a deal that gives an exclusive, for example, to a big established player with a big sales force, that might seem like an easy path. I would make sure that it makes the most sense to do that because at the end of the day, I've seen it before because I used to be a sales guy. As a startup, it's up to you. You've got to be the one that actually makes it happen with your customers, even though you might have a big channel partner that can bring you into meetings and what have you. But at the end of the day, it's your job to convince the customers
Yeah, you
how to
you have
win.
one to drive the initial demand probably and close the deal. Maybe you get a little bit of help, support or service or installation. I don't know, something in the middle layer.
Well, and you have to, it takes a lot of resource to train a sales organization that is already selling something else,
Yeah.
right? And so they have their own thing to worry about. They have a customer that they're selling millions and millions of dollars worth of their own products. So you show up if you help enable the acceleration of sales of other products that they have, that's great. Then now you have a complementary relationship. But at the end of the day, you've got to take care of your own needs and make sure that ultimately you can be successful in selling those products. It's up to you as the founder.
Okay, let's turn slightly towards your business and how you're managing a venture firm today. It seems like it's awfully crazy. Maybe it always is, right? In terms of deal flow and managing portfolio companies and, evaluating next rounds and need for additional financing. What's happening out there today, Clint? Give me a little look behind the curtain in terms of the companies that are looking for funding at your stage and how you're evaluating things today. Um, I mean, to me, and I don't mean to tease you, it's just gotten to be a much more of a early stage, find the right companies and get in and don't worry about valuation, or take out later stage funding opportunities and beat them before they go public. But there's this big void of companies that aren't getting funded because they don't fit that perfect story, and then maybe they don't fit the perfect category. But there's a huge void in the market for some hot stories.
Yeah, I think the one thing that's maybe different today than in the past is that one can invest in the public market today with companies. I mean, if you pay attention to the Mag 7 or the other high-flying public companies out there, they've captivated a lot of the investing public in general, right? I mean, and we've seen people who have invested in companies and got a nice multiple on their investment on a public company. So as a private investor at the earliest of stages, I think it's important for us to be looking for something that can actually deliver way more than that, right? I mean, I think the reason why venture is a category is because there is the opportunity to get involved in a company that can have profound returns on not just your fund, but for all of the company's shareholders and what have you. And we're seeing that with some of the companies out there today. What's interesting now is that the barrier to entry is lowered. I think because AI is making it easier to create technology, even non-technical founders can create pretty compelling solutions. I think it's really important for founders to be, really, really specific about what they're building. I think it's important that they create a really, a really good narrative on, why is your company actually formed and what problem, are you trying to solve? And and you have to help actually the adoption of what's going on in your industry in general with AI. I think we're all, as you know, there are proponents of AI and then there are critics of AI, and I think if you can actually be the catalyst to cause your target industry to fully embrace the value propositions and efficiencies that AI can bring, that's a really good sign. Again, that comes with founders that either have the domain experience, who've been there before, who understand the industry, or the complete flip side of that is that we're seeing today is a lot of really young founders coming right out of school, in some cases dropping out of school, and sort of sucking the air out of the room with excitement and conviction in a way that older entrepreneurs don't have. So I think both can win. There's no one way of succeeding, but we have to look at all of that. When you boil it all down, at least for me, since I focus more on enterprise, is at the end of the day, revenue speaks volumes and customer traction speaks volumes. And I spend most of my time just trying to understand go-to-market, sales efficiency, how do the customers react to this kind of capability and what have you. But it's pretty exciting times right now. I'd say good and bad because I think
For the
uh,
audience
there's
sake, I mean,
a lot
the,
out there.
yeah, you've shared with me a little bit of what you're looking at, and it's very exciting. It's very broad too. I forget though, are there any specific signals or sectors you're watching that maybe other people haven't caught on to yet?
Uh, I highly doubt that anybody is focused on a space that other people aren't thinking about. I think the good news about AI is it's opening the doors for every single market to benefit from. But I would
Yeah.
say one area that we are actually spending a good bit of time on is actually based on the stuff we already talked about. But I sort of think of it as enterprise readiness.
Hmm.
And that's just fancy words to describe that most enterprises today, while they're enthralled with AI, they just aren't ready for it yet. They're not exactly sure how to actually embrace AI such that their company data is preserved and that they have the right kinds of governance in place and all the rules are in place so that you can actually go head first into into embracing it. And so a lot of the companies that we see right now, I can sort of put into different what I'm calling the readiness stack, if you will. So, is your enterprise ready for AI? Well, in what dimension? Is your infrastructure ready for AI? There's all sorts of things you need to do to modernize your infrastructure so that it can be ready. Is your data AI ready? Can you actually organize your data such that it actually can be used effectively. Are your people ready for AI? A lot of people are playing around with it, but is can you really build something meaningful? And are people ready to do that? Are we ready to go from single player mode to multiplayer mode again, if you will? And then the last one would be governance readiness. Just because you put you release agents inside your infrastructure, are the right people being given permission to access the right types of agents, and are you able to sort of arbitrate who gets access to what?
Yeah.
Because there's a high price to screwing that up, right? I mean, if the wrong person gets a hold of something, that's going to set you back. It's a little bit like in the EV space, when you hear about a crash, the first thing you hear about is that it was this maker's EV that crashed, and then they have to overcome this public, naysaying of all that of all the dangers of this. And it's the same thing with enterprises. I think they're really paranoid. They don't want to, right? They don't want to expose their data.
On that level, what concerns you the most about the AI tidal wave? I mean, one thought is, of course, security of data, uh,
Sure.
breaches, and these things have a threat level that can go to 10 rather quickly.
Yeah.
Uh, and then I know you have a kid in Utah. They're talking about, Mr. Wonderful building his data center out there, and lots of debate about whether that should be permitted and to go through. Um, where do you stand on some of these? Do you have a strong view on how data centers are being viewed, or how security and legislation are coming together or not coming together, or some thoughts around those things?
Well, I think if we as an enterprise community stay disciplined, I mean, in a way, having companies pause for a second and wonder, is my enterprise really ready for this phenomenon? I think that's a good thing, right? Because unlike past technology trends where people can just, go ahead for let's create a mobile app and just throw it out there and see what happens, and or let's just put up an internet store and see what happens. There are ramifications to things not going the way you want now, right? Because now you're really dealing with super valuable data or infrastructure that could be exposed. So I think it's important to be thoughtful about how you do that. And that's why you have people in organizations like the CIO or the CISO or the CTO, and it's their job to make sure and police how companies, how their own companies actually use this technology. And so I think it's really important. I think it's going to play out in a really meaningful way. I'm super excited about how that's going to play out because I think we're seeing companies come out that are helping solve those problems, right? We had a company that just launched last week that is basically working with companies to clean all of the what they call rot data, the bad data that sits inside your company. It's like if you're going to use AI to train on your data, why would you have them train on the mounds and mounds and mounds of garbage data that sits inside your corporate networks, whether it's former employees that no longer work there, whether it's old file formats that aren't even supported anymore, or it's people putting their entire music library on their corporate network. In fact, they were joking that one company that they did an audit of, they found like terabytes of Bollywood movies on their corporate network. Anyway, there's all sorts of garbage data sitting inside networks. So
That's like a good investment though, because I
well,
could.
but so why would you train on all of that data that's unnecessary? So this company Clario, what they do is they actually help figure out what kind of data you actually have in your network, so you can clean that up. It's sort of the Maria Kondo of data, right? So how do you clean all that up so that you're only training on the things that are most relevant, and also significantly reduce your token spend, because why spend money training on data that's not valuable?
Oh, excellent points. Okay, Clint, we're going to now pivot to what I call a little quick fire round and just
Sure.
hit you with a few fun questions. Um, I won't ask you about Cal's football record, though. I mean,
Hey, in a year we might be having a different conversation, but that's the whole beauty of Cal, is that the off season is the time where you're most optimistic.
do you count Mendoza as a Heisman Trophy winner of yours since he went to the school and got all the best education and training and even got his degree and then left to go
Well, I
live?
know what graduation he went to, so
I know. Okay, let me ask you, what's a perfect pitch deck? If I'm coming in to pitch you, what's a perfect pitch deck look like?
what I really like to understand when I see a pitch deck is at the highest level first, like, why are you doing this? Why is your company doing what it's doing? What's the implication of that? Because I think a lot of times decks go straight into their company features and benefits and what have you. And so one of the questions I always ask is if your company ceased to exist tomorrow, what would customers do in the meantime? Right? I mean, is number one is there's probably another solution out there that does that, or maybe not. A lot of times, we have so many companies that are still targeting, problems where people are still using spreadsheets or clipboards and what have you, very old school stuff. Yeah, I think technology has advanced to a point now where there are alternatives. So there's got to be a higher cause there, and what is it that you're actually enabling if you're right? And that has to speak out from the deck.
Yeah, I like that. Along those lines, the founders coming in to pitch you, what's their ideal background?
Um, it's always super interesting when the founder actually comes from the space that they're trying to solve the problem of. Um, because as I mentioned before, it's like what is it that we all don't know about what's really going on in that space? And I think those are key characteristics. But one thing I like to do is I always like looking at the background of a founder, and I sort of draw it out linearly, and I ask myself, is this founder doing this startup? Does it make sense? Like, is this the logical conclusion of this great career that they've built up to this point? And can I connect those dots so logically that's like, oh my gosh, of course, this person's going to kill it here in this space, because it's like they've spent their entire career getting to this point. And that's super interesting. If you see a founder that has sort of whipsawed back and forth between different industries. There's nothing wrong with that per se, but sometimes I wonder if they're still trying to find the right wave to surf on, as opposed to someone who already has been surfing on this one beach for years
Yeah,
and years and years and knows exactly when the tide's coming.
yeah. A company that comes to you in early stage
Yep.
and has comes to the end of the deck and they don't have an exit strategy mentioned, like what their plan is, is that a good thing or a bad thing?
So first of all, the companies we're meeting are literally at their very earliest days. So I think it's fair to not necessarily know how it's going to play out. Fact of the matter is the numbers talk. I mean, like 90+% of startups exit, successfully exit through M&A. It's great that there are public market options and what have you, and I think everybody would love that as an option. But yeah, I think it's okay to not necessarily know, but I also think it's important for entrepreneurs to know what they're building is actually really big, and they're not interested in a short term or a shorter term, outcome, if you will, because that's obviously not great for venture investors. There's nothing wrong with having a short term perspective, but it doesn't necessarily mesh well with the venture model. So
Right.
there are other ways to fundraise for your company.
Peeve of mine. I don't think you should have an exit strategy at that early stage anyway. Okay, five positions, CTO slash VP of engineering, um, product marketing, CMO type, CRO, head of sales type, um, and a finance type.
Okay.
They put them in order when you want to have them hired and on board.
Oh, okay. Uh, well, I think the technology folks need to be there from the beginning. I think they're the ones who are actually going to architect
So the
this.
CTO with the product smarts for which one do you?
Yeah, well, I think the founder typically has some at least the initial product idea. So they have to have that, but then they also have to have the ability to get the product built. Um, Interestingly enough, a lot of companies that we run into that are trying to solve a problem in another industry, they're actually started by non-technical founders because they're the ones who like grew up in the bowels of some industry and said, there's got to be a better reason. There's got to be a reason why, there's got to be another way to do this, right? And so,
Vibe code something, or they can, you know,
yeah, yeah. Or a lot of times what'll happen is they'll say, look, I'm gonna create a startup to disrupt this industry. And in many cases, they'll like team up with like their college roommate who works at Google or something, and so they team up with somebody technical and get the product built. But I think that tandem needs that ingredient needs to be there. Having said that, they also have to be good at selling because you don't want to necessarily spend on expensive sales resources until you really have good product market fit and are ready to scale the business. But when you do have that, that's a good time to start contemplating bringing on an additional resource. I don't know if there is a one size fits all for companies, but somebody said a few years ago, something I like is that as a founder, what you want to do is figure out what you're spending the most time on and then fire yourself and bring somebody in so you can focus on some of the other things, right? I think a founder has to sort of be disciplined in all corporate
mean,
disciplines, if you will.
that's an interesting point because a lot of times at that stage of company development, they're really encouraged to be founder-led, sales driven, right?
Sure.
But my experience would say that that's fine to help open the doors and create the relationships and spell out the product, but you probably still want to have an experienced salesperson drive the overall process from opening the opportunity to closing it.
Yes, with the exception that I don't necessarily think you need to bring in an executive person responsible for sales or revenue right out of the gates. I think it's perfectly fine to incrementally bring in some resources to help offset your efforts as a founder. Because at the end of the day, for a good bit of time, you as the founder are going to be the one that closes
Right.
opportunities. But if you need additional support to help fill the top of the funnel up with opportunities to go and close, I think that's super helpful, but it doesn't have to be high level.
So we're going a little bit longer than usual, so I'll have to just extend my tab next time we go out.
Okay, drinks
But
on me.
yeah, but what about the most common mistake then you see from companies at this stage that you meet with? Is it hiring too early, too late, spending on marketing too early, too late, buying ads, or hiring overpaying for engineering talent? I don't know. Tell me
So actually, the common thing that you just said on all those is spending money before you really know what you're going to get out of it.
that you
And I
need it.
think that that's really important, right? If you're spending money on ads and you don't really have product market fit yet, then you're just bringing in the wrong kinds of customers. If you're hiring a salesperson when you don't really need one, you're spending money going, unnecessarily, and so all those disciplines. I
Yeah,
think you just have to be really disciplined with how you spend.
right on. Clint, my partner, Moment Ventures, little sleepy Palo Alto firm.
and retired basketball players.
Retired hoop star. This has been really fun. Thanks for chatting. Any final thoughts you want to share?
No, I think it's a great chat, and I'm excited for the time. I'm excited for founders going out there doing their thing, and excited to meet with them.
That's awesome. Thanks so much.
All right, Keith. Thank you.